What is up, everybody? Happy Saturday and welcome back to the Everything Crypto Show, where we keep you up to speed on the most important news moving the crypto markets. Now, we are back today with a very important daily market update as a new DEX has just launched on the Cronos chain, the first one that actually allows leverage trading through DeFi. So we're going to break all that down in this video, as well as Coinbase making a major acquisition that will allow a ton of institutions to invest in crypto through their Coinbase asset management platform. And last but not least, we have the SEC blocking the Binance acquisition of Voyager, which was intended to return millions of dollars back to customers. So without further ado, it is time to sit back, relax, grab that morning cup of joe, and enjoy the show. Now, make sure to hit that sub, like, and notification bell if you have not already, and join the Everything Crypto Squad. And with that, we're going to hop right in here with the question of the day. So today, I want to know, what is your favorite decentralized application on the Cronos chain? Let me know in the YouTube comments down below. And with that, we're going to talk about Fulcrum Finance first. They are, in fact, the sponsor of this video. So thank you to Fulcrum Finance. And this is the first of its kind DEX to launch on the Cronos chain that does actually allow leverage trading. So you can now get access easily to the Fulcrum platform via the DeFi Wallet dApps browser. It is right there at the top, as well as on the home screen of the Crypto.com DeFi Wallet, allowing for very easy access to this new DEX. And here is their website here. So right off the bat, you can see that you're able to trade, earn, as well as participate in their full token IGO. So here is their trading UI interface, a very clean look, which I do like right off the bat, which does make it a very beginner-friendly platform. Right here, you can see they have Bitcoin to USD as well as Ethereum to USD trading pairs, both offered at a max of 25x leverage. Now, before we actually get into how you can make a leverage trade using this platform, please do your own research. This is not financial advice. Leverage trading is a very easy way to lose money if you do not know what you are doing, but also a very lucrative way to make a lot more money and multiply your gains if you do know what you are doing. So you can see here you are able to long or short the market. This is another advantage when it does come to leverage trading, as it does allow you to make money on both the way up and on the way down. And you can see here you can either do a market buy or a limit buy. I am always a fan of doing a limit buy because it pretty much guarantees you are not going to get Bitcoin unless it does hit a certain price. So using the example of Bitcoin here, you're going to see that the price is currently at about $22,310. So we're going to go ahead and put in a limit price of 22.3K as an example. Now, here's where the leverage comes into play. So let's say that I want to put down 100 USDC, and then I'm going to go on, let's say 10x leverage. You can do anything from 1.1x all the way up to 25x leverage. This effectively means that I am putting down 100 USDC, and with 10x leverage, I'm effectively getting 1,000 USDC for this trade. And they break down exactly what's going to happen right here. So leverage is 10x, entry price is 22.3K. That means my liquidation price sits at 20,200, effectively a 10% margin for error, fees $1.50, as well as the borrow rate and available liquidity. Now take a look at this. If we actually do go ahead and bump the leverage all the way up to 25x here, my liquidation price goes from 20.3K or 20.2K up to 21.6K. This effectively means that the more leverage you are using, the easier it is to get liquidated, but your gains are also further multiplied if the trade does go your way. So very simple to use UI interface and a good way to multiply your gains if you are a more experienced trader. But once again, please do your own research and make sure that you are not investing with money that you are not comfortable losing. Now, we do also have here the Earn program, in which you can stake their very own FLP token as well as their CRO. And last but not least, here on their homepage, you can see that you are able to participate in their full IGO. So how do you participate in this? You buy and auto stake FLP in Fulcrum with at least 250 USD worth. And secondly, you are going to stake a required amount of XVVS in a VVS Finance vault and be a VVS Minor Mole NFT holder. So also teaming up here with VVS Finance, the current largest DEX on the Cronos chain. But the only difference between VVS and this is that Fulcrum does in fact allow leverage trading, the first platform to do this on Cronos. So once again, thank you to Fulcrum Finance for sponsoring this video. And with that, we're going to hop right in here with the charts. Now, starting off with Bitcoin, we're not going to waste too much time on the charts today because honestly, there is just way too much news to get through, and Bitcoin has not really done much, still sitting at 22.3K. And I'm not making any sort of decision when it does come to Bitcoin here until I see Bitcoin itself make a convincing convincing move one way or the other to the downside, which I do think is the more likely scenario. I think that a retest of $20,000 is most likely. That will put it back in for a retest of the 2018 all-time high, a very strong area of support and where I think the bulls would feel comfortable stepping in. And to be honest, even without the news of Silvergate, which did send us to the downside, which I covered in yesterday's video, I mean, I did suspect Bitcoin was going to make its way back down anyways, just based on the fact that we had 2 weekly candles try to break above the 50 and 200 week moving average, both of which got rejected. And 20K is the next level of support on the charts where I do think Bitcoin is headed in the coming weeks. Now, just similarly to Bitcoin, let's actually take a look at Ethereum, which is also getting rejected at its 50-week moving average. That's Bitcoin again. Yeah, so Ether here, the only difference between Bitcoin and Ether is that Ether is actually above the 200-week MA while Bitcoin is below it, but both of them are getting rejected at the 50-week moving average, similar to Bitcoin here. 1 candle, 2 candle, both got rejected. Ether now making its way back to the downside, and just as I suspect, Bitcoin is going in for a retest of 20,000, its 2018 all-time high. I think Ether is also due for its previous bull run all-time high. They're sitting at 1,400, so lots of similarities between these two charts at the moment, and that is what I'm looking for when it comes to these two blue chips in the coming weeks. Now, taking a look at the overall crypto market on the day, we have a little bit of a mixed bag here. I mean, like Neo up 5.1%, Trust Wallet up 12.6%. On the week, once again, a mixed bag, but majority pretty big in the red here. I mean, like HBAR, 1inch, Decentraland, Bitcoin, Huobi Token, Cosmos, you name it. Majority of these alts are in the red with a couple of exceptions here. On the month, we do see that majority of them are in the red as well, aside from a couple of big gainers like OKB, which we did cover last week on the channel. And then on the year, Lido as well, up 16.3%. We actually covered this last month as the Ethereum Shanghai upgrade being a big catalyst for the price action, which so far has actually played out pretty well, up 32.4% on a yearly basis. And year to date, I mean, let's see. So on January 1st here, we were looking at $1.15, and it's currently trading at $2.68. So over a double up here for Lido Finance since the beginning of the year rally. But for the most part, I mean, I do suspect that we are going to make our way back to the downside. Bitcoin down 3.2% on the week, Ether down 2.3%, BNB down 4%. And we're going to cover BNB later in this video, as obviously Binance has seen a lot of trouble being given to it by the SEC. Now, to hop into the Bitcoin and Ethereum news before we get into the nitty gritty, I want to read you guys this tweet because this is something we talk about quite often on the channel. And it says here, people wonder why the Bitcoin price went down to 22K. Instead of wondering why is the amount of Bitcoin being held over a year continuing to reach all-time highs, why is lightning capacity and usage continuing to reach new all-time highs, and why is the hash rate continuing to climb and reach new all-time highs. And that's why on this channel, even after we cover the price action, I do take a look at the fundamentals of Bitcoin and Ethereum, because crypto is volatile. You need to learn to ignore the price action and look at the fundamentals. The fundamentals are constantly improving for Bitcoin and for Ethereum specifically, and therefore the price appreciation will follow, even though crypto does go through very volatile and these 4-year cycles that do tend to really like take it out of the hands of impatient people who cannot handle the volatility. Pay attention to fundamentals and take a look at this right off the bat. I mean, look at the addresses of people holding a Bitcoin over like year over year here. And we're going to reference 2019 because 2020 is when they started all the fake money printing and pumping that into the economy. So we're going to use 2019 as a reference point, in which people holding under or just over 1% of a Bitcoin was at 7.8 million, now sitting at 12 million. People holding 10% or more of a Bitcoin in 2019 was at 2.8 million, now sitting at 4.2 million. I shouldn't say people, more specifically, I should say wallet addresses. And then in 2019, the people holding over 1 Bitcoin was at 780k, blah, now sitting at 980k. So not even a million wallet addresses globally are holding a full Bitcoin at the moment, just to put things into perspective. Taking a look at the 1-year hodl wave, I mean, let's take a look at this right here. So in 2019, we were sitting at about, let's say like 55%-ish in terms of the amount of Bitcoin that remained dormant for over a year. That is now at fresh all-time highs of 67.15%. Taking a look at a 5-year hodl wave in 2019, this sat around, let's say 21%. It is now sitting all the way up at about 28.5%. And then the 10-year hodl wave, so the amount of Bitcoin that has remained dormant for over 10 years now, has actually increased the most rapidly, which does make sense because this is kind of on like the longest time frame. This is up from 5.76% all the way now up to 14.2%. So the fundamentals of Bitcoin continue to improve. Let's take a look here. So that was the amount of Bitcoin being held, the hash rate climbing to new all-time highs, and lightning capacity. Yeah, so we're going to take a look at lightning network capacity as well. So let's search Bitcoin here. This is Bitcoin, and then we're going to click on the lightning network, which is the layer 2 solution for Bitcoin. And you guys can see that here as well, the amount of Bitcoin since the Lightning Network has actually been tracked on DeFi Llama has gone up from 1.16K in 2021, now sitting here all the way up at just over 5,000 Bitcoin being held on the network. So rapid adoption of the Lightning Network. And then let's go back to the Bitcoin hash rate here. Once again, this shows you guys how many miners are fighting to validate their piece of the Bitcoin blockchain and get that Bitcoin as a block reward, sitting in all-time high territory with the peak on the 7-day moving average sitting around 321 million and the 7-day moving average on the hash rate currently sitting at 318 million. So the market is crashing. Drown out the price action when that happens and take a look at the fundamentals, which despite the volatility of the price itself does continue to move to the upside. If the adoption is growing, the fundamentals are growing, and therefore I do believe it is only a matter of time before the price does appreciate. So fundamentals, hash rate hitting all-time highs, and Ether supply actually hitting all-time lows here since the merge has gone live, burning off just over 44,000 Ether since the merge went live 170 days ago. Now, to put this into perspective, had we stayed under proof of work, this would have actually been 1.9 million ETH being issued to these miners and dumped on retail, and we can see here that would have had the Ether supply sitting at 122.4 million. Instead, the supply is sitting at 120.4 million. So there is 2 million less Ether to go around here than there would be if we had stayed under, rather if Ethereum had stayed under proof of work. And once the crypto as a whole, is back in a bull market, I think this is when we are really going to see Ether flip deflationary at a much more rapid pace, more buying pressure, more on-chain activity. The Gwei meter stays above 15.5, which leads to more Ether being burned than issued out to validators, and the cycle just continues from there. So this is just your friendly reminder that regardless of what is happening on the day-to-day, to zoom out, keep that long-term perspective. Despite the news that does come out for crypto, I am a firm believer that Bitcoin will in fact hit 100K very generously. Like, that is like a very modest price target in my opinion, and that Ether will visit the 5-figure price range, hitting $10,000 eventually. Now we're going to hop into the news because despite, the long-term outlook still being bullish for crypto, in my opinion, in the short term, there is definitely a lot of things that need to be sorted out that, in my opinion, could lead to some buying opportunities here before we do go higher in the crypto market. Now, first of all, we saw the COINBASE CEO say that clear crypto regulation is a matter of national security for the US, and this was in, I believe, an interview with CNBC. So the exchange has launched a new campaign as it tries to educate Americans about the benefits of crypto and get politicians and regulators to devise clear rules. In an interview with Bloomberg, so not CNBC, it was Bloomberg, he pointed to how major financial hubs, including London, Singapore, and Hong Kong, have embraced crypto and grappled with policy. And he warned that unless the same happens in America, there's a chance that the future of the financial system will be built elsewhere. We're already seeing that begin at the moment, as America has clearly been slow to adopt cryptocurrency and get some clear regulation in place. Armstrong pointed out 5G and semiconductors as examples of areas where the US lack dominance because the technology went offshore, alluding to concerns that have been raised about Chinese infrastructure being used for such products. And that's exactly what happens. The US tends to push these things out of America due to the lack of regulatory clearance. Then they end up getting built in China instead, and then North America complains and they're concerned because these things are coming from China, as obviously there is some political tension there. So this was followed up by a piece for CNBC where he warned that superpowers are challenging America's position as the leader in global economic and political affairs. So China, for example, has made significant progress in digital currencies and has already launched its own digital yuan. Sorry if I completely botched that that. Additionally, the UK, Japan, and EU have all made significant progress, while the EU most recently introducing MiCA. Armstrong explained that there would be a big advantage if the US were to issue digital dollars on the blockchain, as these assets could then reach millions of unbanked and underbanked people worldwide and power remittances. So he warns here that America is at a once-in-a-generation inflection point. We have the opportunity to be the leader in the digital currency space and reap the benefits this leadership enshrines, or we can concede our leadership role to geopolitical adversaries who are eager to take the mantle as the 21st century's global heavyweight. As other countries implement regulations and guidelines for crypto, the U.S. risks falling behind both technologically and politically, and he argues that clear regulation would create a more stable and secure environment for cryptocurrency to thrive and will help to attract more investment and talent to the US, and then calls for agencies to work with American crypto companies, not against them. Now, off the back of this interview, Coinbase also went ahead and acquired One River Digital Asset Management, and this is a very big move here with over $130 billion of quarterly institutional trading volume and over $50 billion of institutional assets on the platform. Coinbase does operate at the center of the institutional digital asset market, and basically what they have done here is gone ahead and acquired One River Digital Asset Management, a subsidiary of One River Asset Management. This is an SEC registered investment advisor. They will form the foundation of Coinbase Asset Management and offer investment advisory services to a range of new and existing institutional clients. So Brian Armstrong fighting for regulatory clarity and at the same time trying to really bolster Coinbase's position as a centralized exchange that does offer asset management to institutional clients. And we know institutions are really looking to get into crypto here. They're simply just waiting for more regulatory clarity, which is also why I believe that the Coinbase CEO does want the SEC to pick up this sort of like regulation and clarity when it does come to crypto. And this is not the first time we have seen Coinbase make a move into the institutional space. In fact, we saw here back in August of last year that Coinbase was selected by BlackRock to provide their Aladdin clients access to crypto trading and custody via Coinbase Prime. So here we can see that Coinbase is partnering with BlackRock, the world's largest asset manager, to provide institutional clients of Aladdin, BlackRock's end-to-end investment management platform, with direct access to crypto, starting with Bitcoin through connectivity with Coinbase Prime. Coinbase Prime will provide crypto trading, custody, prime brokerage, and reporting capabilities to Aladdin's institutional client base, who are also clients of Coinbase. So Coinbase here is looking to be the on and off ramp for these institutions, and if they can successfully do this, if we see institutions finally get access to crypto through some regulatory clarity, this could flood billions, even trillions of dollars into cryptocurrency. And to put things into perspective, I mean, the total crypto market cap sits at just over 1 trillion. Bitcoin sits at under 500 billion in terms of total market cap. This is serious capital that could potentially flow into crypto from the US. Once again, if we do see that any sort of regulatory clarity and actual legislation from the SEC and other lawmakers, but unfortunately, it does seem they're dead set on continuing to dampen adoption, and this article was published on March 2nd, in which Gary Gensler says that crypto exchanges may not be qualified custodians. So he says here, basically, based upon how crypto trading and lending platforms generally operate, investment advisors cannot rely on them today as qualified custodians. To be clear, just because a crypto trading platform claims to be a qualified custodian, that does not mean that it is. The SEC chair said that recent crypto bankruptcies highlighted the need for updated custody rules. When these platforms fail, something we've seen time and time again is investors' assets often have become the property of the failed company, leaving them in line at the bankruptcy court. Now, what this completely fails to mention is that the reason a lot of these exchanges have gone offshore is because the SEC once again lacks any sort of regulatory clarity. Therefore, these companies go ahead and operate offshore, launch their products in the US, and this is what leads to a lot of these meltdowns. And then the SEC cannot do anything to protect investors despite claiming that that is their goal, because they essentially push these companies offshore instead of welcoming them into the US under some sort of clear regulation. Now, some exchanges such such as Coinbase are confident of their compliance. Coinbase Custody Trust Company serves as a qualified custodian under the SEC's custody rule, and the SEC's recent proposal does not change that. CCTC is an institutional custodian chartered as a limited purpose trust company under the New York State Department of Financial Services, a Coinbase spokesperson said in a statement. Now, I actually want to go ahead back to One River Digital Asset Management. And I do believe that this is also an SEC registered company. So I just want to confirm that. Because if it was, that would make a lot of sense. Yeah, so an SEC registered investment advisor, One River Digital Asset Management will form the foundation of Coinbase Asset Management and offer investment advisory services to a range of new and existing institutional clients. So Coinbase purposefully actually acquiring a company that is already SEC compliant. I think that is very important for this exchange. And yeah, clearly they do need to do this because the SEC cannot get their crap together when it does come to making any sort of clear guidelines. And now they're trying to warn that all these crypto exchanges, despite claiming they are qualified custodians, may in fact not be qualified custodians. My stance on this has remained the same for a while now. If you are using a centralized exchange, which I'm sure majority of you are, it should be nothing more than an on and off ramp into self-custodial or preferably a cold storage wallet where you have true ownership of your assets. And a perfect example of why I really don't trust centralized exchanges comes from the meltdown of multiple of them like Celsius, Voyager, and FTX. And what we're going to wrap this up now is specifically talking about Voyager, as it was announced after their meltdown in the summer of last year, in which they basically had to halt deposits and withdrawals, and they are currently holding customers' funds hostage on the platform. We saw in December of 2022 that Binance US was set to acquire Voyager Digital for $1 billion. Now, this was meant to be a bid to return crypto to customers in kind in accordance with court-approved disbursements and platform capabilities. And let's actually go ahead and take a look at centralized exchange transparency here. And just to show you guys, like, this would have been a massive power move for Binance, sitting at $69.6 billion in customer assets on the platform, despite seeing a $1.81 billion worth of outflows over the past month. And this would have been a big power move from them to gain the trust of the community by returning these assets to customers whose funds have been locked on this platform since Voyager did actually announce or did file for Chapter 11 bankruptcy. So this would have been a move that would have been really just a win-win, actually allowing Binance to go ahead and return assets to customers, as well as really putting trust into Binance, which would be very good for their business and customer acquisition in the long term. So this would have been a very good thing for the trust of centralized exchanges, as well as people waiting to get their money back. But unfortunately, the SEC has gone ahead and blocked the Binance acquisition of Voyager Digital, or they haven't officially blocked it yet, but they're objecting it at the moment under the basis that the VGX token could be an unregistered security. And if you guys have been with the channel for a while, you may remember I've warned about this multiple times, as back in December, the SEC called the FTT exchange token a security following the collapse of that exchange. And I pretty much said that if they're calling FTT exchange token a security, what is stopping them from calling every other exchange token a security, including CRO Coin, including BNB, and now including the VGX token? We've spoken about this multiple times on the channel. And I mean, you guys got to figure, like, if they're going to call FTT exchange token a security, what is going to stop them from going after the rest of the tokens that do fall under this category? And here is a perfect example of this, now trying to use this security BS to try and block the acquisition of Binance actually taking over Voyager Digital. I think they'd have a much better basis trying to say that Binance is already a massive monopoly over the crypto industry, and that is why he doesn't want them to acquire Voyager, instead of going under this ridiculous notion that VGX token could be an unregistered security without any sort of confirmation or clear rules to go ahead and prove this. So here is the article. A U.S. bankruptcy court judge, Michael Wiles, appeared heavily skeptical about an attempt by the SEC to stop the purchase by Binance US of assets of defunct crypto lender Voyager Digital at a Thursday court hearing. The securities regulator said the $1.02 billion deal should be blocked because Voyager's token could constitute an unregistered security. So you come here and tell me that I should stop everybody in their tracks because you might have an issue, Wiles said, addressing counsel for the SEC. It's kind of a weird objection. Now, Wiles, who is with the Southern District Bankruptcy Court in New York, said he was absolutely shocked at the SEC's objection, saying it was asking Voyager to prove a negative with little no guidance from the regulator. I get the feeling that this objection has been made as a kind of cover, so you can say later that we'll see we raise these issues. You haven't really, you have done nothing. I need to know specifics. William Updegrove, representing the SEC, said that creditors had not been sufficiently warned of regulatory risks, but declined to take a definitive position on whether VGX was truly a security. Counsel for Voyager told the court that the deal could see creditors achieving 73% recovery, a revision upwards thanks to the recently bullish crypto market. Court filings showed that 97% of its customers, representing 98% of total claims, had voted in favor of the deal, though it has found less favor with regulators. And the SEC warned it could involve the unlawful sale of unregistered securities, and the Federal Trade Commission said it was probing Voyager for deceptive marketing, while Texas regulators said creditors weren't properly warned of the legal risks. So let me get this straight. The SEC blocks a deal where creditors would see a 73% recovery rate after 97% of customers voted in its favor, and they're trying to block this deal and effectively ensure that customers are not going to get their money back if Binance does acquire Voyager. And Gary Gensler wants you to believe that the SEC is trying to protect investors. Give me a break. Now, we did actually see CZ, the Binance CEO, comment on this, kind of talking about this whole thing with the SEC objecting the deal. And he said here, maybe we should pull out, question mark. We are still in support of the deal and helping to return funds to users as quickly as possible, if allowed to do so. So there you have it. The SEC is trying to deter Binance from making this acquisition based on some ridiculous securities laws that they have not even made clear, and effectively ensure that customers do not get their funds back. Yeah, we really believe they're trying to protect investors, as all they do is dampen crypto adoption, force these companies offshore, which causes a lot of them to go ahead and participate in these fraudulent actions, which leads to customer funds being lost, and then they go ahead and even block the acquisition of these companies by other exchanges to return the funds. I mean, they continue to really harm crypto adoption in the US, and we're going to have to see where this goes. But at this point, I really do hope this acquisition does end up going through so that customers can get their money back that was rightfully theirs in the first place. So without further ado, I hope you guys did enjoy the content in today's video. You know what to do. If you made it all the way to the end, you are an absolute champion. Let me know in the YouTube comments down below and claim that champion status. I hope you are all having an amazing Saturday, and I'm wishing you all an amazing weekend ahead. Hope to catch you guys in the next one. Peace out for now.